And good evening. This is the Elliott wave update for the S&P 500 for Monday, January 24th, 2022. Again, what a beautiful trading day it was today. And what absolutely astounding moves these markets made from the opening to the lows back to the closing highs. It was incredible. And at one point, it actually almost felt like it was a setup, because the selling was so intense this morning. It was like just push and push and push and push that it just drove itself down to the next support level that I had to add this morning, and then just rocketed off that level and ended up on the day. The S&P was actually up quite a bit more than it is right now, reaching almost 4410, I believe, before it's starting to drop back. And as we go into the after hours trade. Now, this was an incredible day when we went from extreme negative to absolute covering positive, everything goes up. And I'll tell you what really started it. It was in the Russell. The buyers came back into the Russells much earlier than they did into the Dow and in the S&P and the NASDAQ. So the Russell led the way higher today. So it was small caps. So it's not over yet, but let's go over what took place today. Let's update the labeling, which I've already done, and let's kind of lay out what we can expect moving forward and what we may get for the balance of the week. Okay, the larger count has not changed. Now, what was interesting is that I had marked this spot yesterday. I'd marked Friday's lows at 43.81 as the completion point for the minute wave 5, and then in turn the minor wave 3. And I had said, well, I'm satisfied that this rally is now off to a good start, and I was looking for a minor fourth wave correction. And it really did pretty well all the way through the opening of the Asian markets and most of the Asian afternoon, and then Europe opened. We got a little pop, and then they started to sell. So by the time we walked in this morning and to check in on the markets and get ourselves set up to trade, the Dow had already slipped 400 points. The NASDAQ was already off like $55 to $60. And the NASDAQ was down $150 to $200 in that range. So I was like, oh, okay. So I immediately changed that, left it open, and allowed for this fifth wave, which began all the way up here at 45.92, to finish out. And so we did get back all the way down. And what I had to do was I put in, once I had labeled this as a 4, I threw up a Fibonacci extension from the top of 2 to the bottom of wave 3 up to the top of wave 4, which gives us the fifth wave move. And as it turned out, wave 3 is not the shortest wave. Wave 5 was the longest, but wave 1 remains the shortest wave. So it all fits, and wave 5 extended, just absolutely drove prices lower and reached the 238.2% of wave 3, hit it on the nose at 42.13, with the low actually was 12.75. So it exceeded it by a little bit more than a point, and then rallied quickly back above it. So what can we expect from here? Because as you can see, I've now labeled that as a completion point for minute 5 and for minor wave 3. So the first thing I want to do is take off that support zone. And now we need to measure a minor fourth wave. So we've got it on retracements. I'm going to go from the top of wave 2, the completion point, and I'm going to bring that down to today's lows at 42.1275. Let's bring that up just a little bit. Put it right there. And so we nearly reached this afternoon, and actually came very close to reaching the 382 level, the 38% retracement for a wave 4 of wave 3 comes in at 44.12. almost 44.13, we'll call it. And then just above that level is the hourly 50, which is at 44.20. Now, this all played out in less than one session. And that's what I'm finding so amazing. But the market is so algorithmically driven, or totally algorithmically driven. And this turnaround was in mass. And whether it really was all the shorts that got short between Friday and today going, oh man, and turning around and having to buy it and reestablish positions that they just bailed out of. And plus, just probably massive turnaround in the options and tons of activity coming in, covering spreads, et cetera, et cetera. So there was just a massive covering rally. And often that takes place in a fourth wave. And the reason is that they're early. They're early because if you really were to count, and unless my count is totally off, which I don't think it is right now, this is a minor fourth wave rally to be followed by a wave 5 decline. Now, this whole process is incredible because we shift so quickly from, okay, we're all bullish to we're all bearish to now we're all bullish again. And I think that this is where the beauty of Fibonacci, of Elliott comes into play and truly supports the work that we're doing and for the trading that we need to take part in. So I want to tie into that, the mindset, because so much of today, I was hearing from people and you get into this mindset of negative, you know, the bottoms are falling out, the markets are crashing, the Dow is down 1,000, the S&P is down over 100, the Nasdaq's almost down to its circuit breaker, which would have been 5% down. It got to like 4.95% down, and then they just turned it around, and there was no turning back. There was no turning back. And that is such typical Elliott-based moves. When we're looking at just this turn in the attitude and a turn in the market like this, it's very, very typical fourth wave type moves, where before we were at that 3 of 3 and everybody realizing, oh my God, we're going down and everything is broken and moving averages are getting broken and it continues to slide. And now we're really crashing and everybody's piling out. We saw it across the board. We saw it in the cryptos. We saw it in all the different various markets. And the breakdown, and it was severe. And then suddenly, boom, it stops and they pile back in. Now, what does that tell us about the balance of the week? On an Elliott basis, next step, I'm looking for a 44.13 breaks with some force, which I'm telling you, we're sitting 4 points below it right now. So that kind of tells me between hour after hours, the start of Globex, the Asian markets, the European markets, if they produce a rally like we just did, then we're going to end up here. Now, this fourth wave cannot cross above, let me get it correct, come on, it's right there. Come on, computer. 4,572.75. So it can't cross 45.73. It crosses 45.73, it's not a fourth wave. Then we're going to have to review that count. We're going to have to review everything. Possibly this is just an ABC down, et cetera, et cetera. And then it is off to the races because it's going to change everything. It changes this label. It puts that back as a 3 and brings the 4 down to here, and it's off to the races. Now that, because of the way this thing launched, has to be brought back into the picture. So once again, maybe I'm early because I felt that this label was correct. And there's now a possibility that the market is going to let us know, no, it is not correct. That in actuality, what was breaking down, and even on the larger breaks that we saw, was all within an Elliott intermediate fourth wave. So in other words, this five gets placed probably turns into a 3, but it gets taken off in the 3, then likely gets placed over here, and this 3 gets up here, and this 4 gets placed over here. Now, this intermediate fourth wave, could it be it just is so big of a drop that that still concerns me. But if the market is going to tell us differently, then A, I'm going to have to accept it. B, I'm going to have to label it out. And C, we're going to have to move forward, because the market does not care if we or if I think that that was, just a minor third. This is a minor 4, and we're going to drop back down. So we're going to really find out pretty quickly here. But let's not forget, we still have massive earnings to come out. We still have the Fed and their decision, which is to raise. And so if this is all like we're okay with raising interest rates going up, we still have different news coming out. We still have a threat of an international war, because that's what's going to happen if Russia invades the Ukraine. It will begin a world war, because we got NATO and everybody else standing at the border going like, don't do it, don't do it, don't do it. And if Russia decides, oh, actually, we don't care, we're taking back our territory, there's going to be a conflict. There's going to be a war. And I don't care what everybody says. I don't think that a war is a good thing to happen right now. It really would just kind of stress out a lot of different factions of our economy, of our government, and everything else. So there's a lot of things out there that could upset this apple cart. There's a lot of things that could just take whatever was behind this move and blow it out of the water. So let's just focus. So again, I want to turn and bring everybody back in to say, it's the mindset that we really need to work on. Because no matter what happens, folks, if we're going to get up tomorrow and trade, we cannot be influenced by anything other than the price action that's in front of us. We have to remain focused on what is happening in front of us. Otherwise, you're going to get buried. Because if we continue to listen as this is going down, when this turn, everybody, it's just a turn, it's just a small little bounce, go ahead and sell it, sell it, sell it. Because I kept hearing today, sell rallies, sell rallies, sell rallies. This is far from being over, sell rallies. If you would have sold rallies, you blew out your account by the time it was over. And it's still, the market can still turn and go down and make new lows below what we saw today. Absolutely it can. But your mindset has to be focused on how do you want to trade it? Because that's really what happens. That's what causes positions to turn and for position traders to change their mind. It isn't that they're doing it because they feel that suddenly we're bullish. They're doing it because the market is so far against them that they have to. Their losses outweigh hanging on to things. So again, that's the same way that we have to trade. So you have to have that mindset going for yourself that's going to protect you and block out all that noise. Anything that's going to go against what you're doing. You've got to watch the price action. And as you're watching the price action against moving averages, you're going to be able to see. Now, remember, I have been talking very much, a lot, about what happens when moving averages are broken. Now, I discussed it further on the way down. And I talked about if it breaks the 20, breaks the 50, expect acceleration. We got it. Then it comes over here and it does it again. We got it. Then it comes over here, it touched it, but it failed. We got it. We got the acceleration down. Okay, now we're going back up. Breaks above the 4. We played around here, breaks it again, breaks above the 8. We look at this hour. The noon hour into the close. We rallied up, we broke that 20, and when we broke that 20, it brought out the big guns. Boom. And it just was like, get out of the way. The market will accelerate in the direction that it's going when it breaks that moving average. And it was heading up. It broke it on the way up. And when it did and got that move, that just, you saw them all pile in, massive amounts of stock being purchased, lots of futures being purchased. And that just overwhelmed any seller that was left out there. And so then everything starts to come in. So I'm expecting if this thing gets up overnight above that 50, and it can remain above that 50, then it's going to produce another solid rally. So here are our Fibonacci retracements. Okay, we've got the one level all the way up here. 46.0, is that, well, excuse me, no, 45.72. That's where minor one bottomed. If this is a minor fourth wave coming back up, it cannot exceed that level. But where can it go? First resistance, 44.13, I'm going to call it. It's there. Then we got the 50 at 44.20. Then we have a 50% retracement level at 44.75. Then we have a 618 at 45.37. And the 200 sits above at 45.44. Now, what happens if this holds and it starts to turn lower again? It does appear that I can probably get A, B, C. So it almost is done. I can consider it done. So I would not be surprised to see the balance of the markets coming in and saying no and selling it again. That would not surprise me. Don't forget, they got to trade their own markets and also everything that's happening in the world and what's going on in their individual areas. So we could have reached it today, and maybe that is the end of minor four, and it all happened in a matter of hours rather than days. Possible? Yes. And so here is what we can expect. A move higher would break above resistance, currently right where we are. And if it breaks above the 50 with some force, I would expect some additional acceleration to the upside, and the market could easily reach 44.75. We would be looking for a turn until the market actually invalidates the move. So a minor fourth wave should find resistance at the terminus of the previous fourth wave of one lesser degree. And believe it or not, that's all the way up here. Except it can't go to 45.90. That breaks above minor one. But it certainly can come to within it. And that is the 618 at 45.37. So we have a lot of upside room. But unfortunately, there's more downside room than there is upside. So I had put this on so I can show retracement levels. But now, if we're really going to be looking at what the potential for the market to drop is, then we needed to put our other Fibonacci's back, because in actuality, we have support down here at 41.85. And then our next level is this 382 level, and that's on a much bigger scale, and that's at 3,800, actually just below it. That is a very realistic number. So this correction, this larger correction, has more to go. There's more to go. And what the market needs to do to invalidate that is to come up and break above 45.72. And with today's massive move from being down as much as it was to being up, the Dow being down 1,100, and now the future is up 140. The NASDAQ was down close to 700, and it's finishing up 64. Massive moves. So for tomorrow, to tell you the truth, it is a coin toss as to how they will trade. So upside. We've got our points right at the close, 44.13 to 44.20. Then we have 44.75. Then we have 44.90, actually 44.75 to 44.90. Then we have 45.37 and then 45.44, which is where the 200. A break above that 200 is going to really put me into a, not a bind, but put me into thinking that this indefinitely is telling me that we've just completed 3 down, an ABC down. And that would be right off of here, ABC. If I look at it under Elliott guidelines, it fits. C waves can be crushing, can be absolutely kick your teeth and crushing in either direction. In this case, it was to the downside. And it would be so appropriate because remember that over in the NASDAQ, I have been discussing that this is the NASDAQ high, that's an intermediate third wave, and I'm looking for the intermediate fourth wave completion. That may have happened today. That may be all she wrote, and that's it right there. Today's low in the NASDAQ. And if that coincides with the S&P's low, and these markets are very tightly tied, then obviously the market is now expecting that these earnings that are coming out and that these big tech guys, they're going to blow the doors up and they're going to give great forward guidance. Now, I don't personally think that that's the case, but hey, who am I? So let's stick to the technicals. The technicals are giving us both sides of the story. And we now have our breakpoints so that we can see when we need to stop and realize we're going much higher, okay? And again, I'm gonna tell you that point is 45.72. We will get strong hints on the strength of what may be left. If they can't pull this thing back to at least the 20, and they just keep pushing it higher, then it's likely that low stays in place. And we have to then start considering additional new highs above 48.08. And I'll tell you, the kicker is every time I go ahead and say, okay, I'm more comfortable, I'm going to put the 5 and the 5 and the 5 back up there. Every time I do that, then the S&P tells me, you're early again, and it takes it away. Does not mean it's not going to happen, just means it's going to be out there. This larger correction is still out there in the works. Whether this market goes back up and goes to 4,900, goes to 5,000, that larger correction is still going to happen. It's just being delayed. For whatever reason, for whatever, the market's not going to do it right now. But now we want confirmation that the market's not going to do it right now. So I'm leaving the count as is. I'm leaving the count that this completed a minor third. We're in a minor 4. We've already reached the 382 level. Next up would be 50 to 618. I don't want to see it above that 618 level because then it's going to interfere with the count in terms of invalidating it on a break above 45.73. This is where I'm going to leave it. Continue to use your moving averages. They are the guides. They will tell you what's going on. And when they switch and when they change, don't fight. Go with. Regardless of what you may feel, regardless of what you're hearing and the noise around you. Get yourself into the right mindset to block out that noise and focus on the price action. When we focus on the price action, I don't see where we can wrong because the market is always perfectly priced and the market is always correct. That's where I'm going to leave it. Our next update, Tuesday, the 25th.